Hey everyone, welcome back to Corporate Decoder, the place where we decode the inner workings of big companies. And today we have got a juicy one, a quarterly report from Rapid Micro Biosystems Incorporated. You know, companies are always telling you everything is great, right? Well, we are going to dig into this report and see what is really going on behind the scenes. Before we dive deep into the numbers, if you love getting the real story behind corporate filings, make sure you are subscribed and hit that notification bell so you don't miss out. Also, we have a fantastic community over on our Discord server, linked in the description below, where we break down these reports together. Alright, let's get straight into it. This is Rapid Micro Biosystems Incorporated's quarterly report for the period ending the 30th of September 2025. Think of this as their mid-year checkup. First up, the balance sheet. This is like a snapshot of what the company owns and what it owes. On the asset side, they have $18.9 million in cash and equivalents, which is pretty standard. They also have about $22.3 million in short-term investments. Now look at their liabilities. They have notes payable of $18.8 million, which is new as of this quarter. That means they took on new debt. And get this, a warrant liability of $358,000. Warrants are like options to buy stock in the future, and when they are not treated as equity for accounting purposes, they become a liability. Now let's talk about how much money they made and spent. Their total revenue for the 3 months ended the 30th of September 2025 was $7.8 million. That is a small increase from the same time last year, but not a huge leap. Product revenue stayed pretty flat at $5.2 million, while service revenue saw a nice jump to $2.6 million. This is good because service revenue is often more predictable and can lead to higher profit margins. But here is where things get interesting. Their total costs and operating expenses were a whopping $19.2 million for the same 3 months. This is actually a decrease from last year, which is a good sign that they are trying to control their spending. However, when you spend way more than you make, you end up in loss. They had a loss from operations of $11.4 million for the quarter. That means they are still losing money. Looking at the 9-month picture for 2025, total revenue grew to $22.3 million, up from $19.8 million last year. That is a solid 12.5% jump. Product revenue edged up, but service revenue was the star performer here again with a 29.4% increase. Great job on the services side. But those costs and expenses for the 9 months were $57.5 million. That is a big number. Despite revenue growth, they still managed to reduce their total costs by 3.4% compared to last year. This is a positive step showing some cost control efforts. Even with cost reductions, their loss from operations for the 9 months was $35.2 million. While this is better than last year's almost $40 million loss, it shows they are still a long way from profitability. Now let's look at other income and expenses. Interest income dropped significantly. This makes sense if they have less cash sitting around earning interest or if interest rates have fallen. But hold on a minute. Interest expense dramatically increased. This is directly related to that new debt they took on in August 2025, the loan and security agreement with Trinity Capital. They drew down $20 million initially, and this comes with interest payments. This new debt is a big reason why their interest expense jumped by over 3,400%. Ouch. And where does all this lead us to net loss per S-hair? For the quarter it was $0.26 per S-hair. For the 9 months it was $0.78 per S-hair. This means for every share you own, you are effectively losing part of its value each quarter. While this number is better than last year, it still highlights the ongoing losses. Let's zoom in on revenue streams. Product revenue is mostly from their Growth Direct systems and consumables. They sold 5 systems this quarter, down from 7 last year. This is a bit concerning as systems are usually the big ticket items. However, consumable revenue, that recurring revenue, is up, which is a good sign of customer usage. Service revenue is growing nicely. This includes validation services, installation, and service contracts. As more systems get validated and put into use, more service contracts are sold, which helps create a more stable revenue stream. Their key business metric is systems placed. They placed 5 systems this quarter, down from 7 last year. This shows a slight slowdown in new system sales for this specific quarter, but cumulatively they have placed 174 systems, which is up from 156 last year. So the overall installed base is growing. Systems validated is another important metric. They validated 15 systems in the 9-month period, up from 12 last year. This means more customers are successfully getting their systems up and running, ready to use consumables and services. That is a positive indicator for future recurring revenue. Now let's talk about the risks. The company frankly states they have incurred significant losses since inception and expect to do so in the future. They are burning through cash, and while they have a goal to reach positive cash flow by 2027, there is no guarantee they will make it. Their limited operating history also makes it hard to predict their future. A huge risk here is the commercial success of their Growth Direct platform. If customers do not adopt it widely, or if competitors come up with something better, they could be in trouble. This platform is their main product, and its failure to gain traction would be devastating. Another big concern is their reliance on third-party suppliers. Some components are single-sourced. This means if one of those suppliers has a problem, they could be out of luck, leading to production delays and missed sales. They have a plan to qualify new suppliers and maintain inventory, but it is still a significant risk. They face intense competition not only from established players, but also from newer companies. If they cannot keep up with technological changes or introduce new products, effectively they could lose their market position. And for investors, the stock price has been yo-yoing. They have even had issues with NASDAQ minimum price requirements in the past. This volatility can lead to big losses for shareholders and makes it a risky investment. Finally, let's talk about the company structure. They have a dual-class stock system, and a lot of the control is concentrated in the hands of a few executives and early investors. This can limit the influence of regular shareholders and might make it harder to sell the company even if stockholders want it. So what is our take on Rapid Micro Biosystems Incorporated? Well, they are clearly in a growth and development phase. They are pushing hard with their Growth Direct platform and have a solid strategy for recurring revenue through services and consumables. The growth in service revenue is a bright spot, and their efforts to control costs are commendable. However, they are still losing a lot of money, and their reliance on new funding, like that recent debt deal, is a double-edged sword. That debt gives them runway, but also increases their interest burden and associated risks. Their dependence on key suppliers is also a ticking time bomb if not managed perfectly. For investors, this is a high-risk, high-reward situation. The market for their technology is growing, but so is the competition and the regulatory landscape. They need to execute flawlessly on their product development, sales, and cost control strategies to have a real shot at long-term success. The market will be watching very closely to see if they can turn those losses into profits, and if their platform truly becomes the trusted global standard they aim for. Alright, that is our deep dive into Rapid Micro Biosystems Incorporated's quarterly report. What do you think of their financial health and future prospects? Share your thoughts and analysis in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more unfiltered corporate insights. And of course, join us in the Discord community linked in the description. Thanks for watching, and we will see you in the next one.